Welcome back to the channel, everyone. The FOMO is starting to come back to AMC. Don't get me wrong, we're not at peak FOMO levels like we were back at the start of June, but it is definitely, undeniably, starting to come back. I've also got a few very interesting developments on the dark pool that I want to tell you about. So stay tuned and let's make some money. But before I dive into the video, if you haven't already, be sure to sign up to Moomoo. Not only do you get a free stock worth up to $350, but you also get a second free stock with a guaranteed value of $57 on top of that. So that's basically free money, and who doesn't like free money? Moomoo also have excellent free real-time level 2 market data, they've got advanced charting tools, and most importantly they've got 24/7 real-time up-to-date financial news so that you don't miss any of the key headlines, linked in the description below. And now I want to dive straight in with the key information. So, Citadel wouldn't be borrowing millions of shares every single day, routing 75% of trades through the dark pool and threatening to sue everybody if we weren't winning. I hold. And I think this is so true. If we weren't winning, they wouldn't need to put so many of their trades through the dark pool where there's a massive lack of reporting. If everything was fine and they were in control, it would all be going through the lit exchanges. The reason why so much of these trades go through the dark pool is because there's such a lack of reporting. They can mismark their short positions as longs, and they can effectively manipulate their reporting to make it look better than it actually is, and effectively so they can short more shares. This doesn't sound like the behaviour of somebody that is in control and somebody that is winning. This sounds like the behaviour of somebody that is desperate to hang on to whatever little chance they have. Yes, so far this has obviously been working for them because they continue to manipulate the stock and they continue not to be squeezed. But what they don't continue to do is they don't continue bringing the price of AMC back down to $2, for example. At the moment, they're still hanging on to whatever little shred of hope that they actually have, and their end will come to a time because they cannot keep this up forever because of how expensive it is for them to do that. And now if we look specifically at the dark pool, paying close attention to this area here, we can actually see that the dark pool is in a long position and not down here in a short position. And what this means is that most of the orders that go through the dark pool right now are buy orders because the dark pool is in a positive position. Currently, the only thing that's holding AMC down is the continuous ladder attacks that happen each and every day. That is manipulation at its finest, and that's why you don't really see the short interest change too much, because it's really just brokers exchanging shares between each other, or potentially market makers exchanging shares between themselves. I found this great description here of a short ladder attack. Short A sells a fake share at $10, or offers for sale a fake share at $10. Short B buys it, covering their open position. Short B then offers for sale that same fake share at only $9 this time. Short A, the same short A, then buys that stock, effectively filling short B's sell order. When short A buys that share, they cover their $10 short and effectively make a $1 profit. I guess short B also make a $1 loss, and they keep doing this between each other, exchanging those same shares, or even that same one share, and exchanging those profits and losses as well. This is why we're not seeing much of an increase in the short volume and why the dark pool is showing positive. It's very expensive for them to continue doing that, and they can't keep it going forever. And at some point, a large fund is going to cotton on that they're just exchanging the same one share back and forth, and we're going to have some more large institutions buying into AMC to squeeze those shorts. And now what I also wanted to talk about was FOMO coming back to the AMC stock. This Google Trends that records the search terms for a certain topic over a certain time period and ranks that time period on a scale of 0 to 100 in frequency of searches. As you can see, for example, AMC obviously had a lot of searches back in January, ranking at 100 out of 100, or 100%. Back in June, there was also a lot of interest in AMC, giving it a ranking of 89% or 89 out of 100. But we also knew that back in April, for example, there wasn't as many eyes on AMC, and that only had a ranking of 15 out of 100, or 15%. It seems that in September we hit that kind of low area around 18%, and since then we've been working our way back upwards, now back to around 30%, which is actually the highest we've been in interest or sentiment since July time. You might also notice a comparison between AMC's actual price and the sentiment of Google Trends. As you can see, AMC's price and the sentiment ran up in January and in June as well. But AMC's price and the sentiment kind of flagged and faltered in April and also in August and September as well. This suggestion of Google Trends shows that more interest is now flowing back into AMC stock. If this continues back upwards, I would also expect AMC's price to follow. Obviously, the stock is being manipulated and held down, but it won't take long for a large institution to cotton on to how much interest is coming back to AMC and go long in a very big way. Maybe we'll see Renaissance Technologies just decide to, I don't know, buy like 50 million shares or 100 million shares of AMC just to put those shorts in their place. On that note of sentiment, I wanted to give you a bit of an update on the petition to ban payment for order flow and suspend dark pool activity for harshly affected securities, that post that I linked you to in yesterday's video. It's currently got around 22,000, nearly 23,000 signatures and should probably have over 30,000 signatures before the market opens. This is a great way to show the SEC that we don't support payment for order flow and we do support those delimit orders, and Citadel is not trying to help us. Hopefully the SEC bring this petition up in the lawsuit and the court case when Citadel try and claim that they're protecting retail investors, because effectively us retail investors are speaking and saying that Citadel is not protecting us. Now, on top of this, I wanted to give you a bit of an update on the wider market as well, and the shares in China's Evergrande have just become unfrozen, like I suggested they would be yesterday. And as a bit of a summary for the day, it did not look good for Evergrande, down 12.54% on the day. Evergrande shares fell sharply after the $2.6 billion asset sale collapses. There is no guarantee that Chinese property giant can meet its $305 billion of debts, starting with a deadline on Monday that could trigger default. So not only have Evergrande not just received approval to sell off 51% of their business line, but they announced on Wednesday that it's formally abandoned plans to sell off that slice of Evergrande Property Services. And Evergrande also announced that there is no guarantee that they can meet its financial obligations in order to stay afloat. Obviously, Evergrande owes billions to offshore bondholders and has already missed several key bond interest payments since September. The company will officially go into default if it fails to stump up $83.5 million when a 30-day grace period for repayment originally missed in September ends on Monday. Creditors say Evergrande has not made contact about the repayments, and it's widely expected that it will default. Now, something super interesting is that China has just released how much debt these property developers actually have. Chinese property developers have a total outstanding debt of 33.5 trillion yuan, or 5.24 trillion US dollars. And therefore this could soon turn into a $5.24 trillion default that would definitely impact the US financial system in a massive way. Interestingly, Evergrande have secured a 3-month extension on their jumbo bonds because the chairman has added his own cash collateral to the fund. As the article notes, it's super interesting and rare that Evergrande actually got that 3-month extension, especially as that business sale or 51% business sale just fell through. It's almost like Jumbo Fortune Enterprises is too heavily exposed on the $216 million bond and was basically willing to offer them anything just to get some of their cash back. It seems like the only reason Jumbo Fortune Enterprises actually agreed to the extension is because the chairman put in some of his own money, and therefore Jumbo are at least getting some form of cash. And finally, it seems that investors are fleeing gold for cryptocurrencies as inflation worries pick up. A fund manager investing in metals laments there's been zero interest in our strategy, while Bitcoin obviously hit a new all-time high. Investors are dumping gold for cryptocurrencies as inflation picks up, fleeing a metal historically touted as a store of value to buy digital assets little more than a decade old. More than $10 billion has been pulled from the biggest gold exchange traded fund this year, and funds' physical gold hoards have also been selling down as well. Bitcoin has meanwhile doubled in price to a record high of more than $67,000 this week. Some investors have begun to view it and other cryptocurrencies as an inflation hedge, even if none existed during the world's last serious bout of inflation. Veteran gold traders acknowledge that times are changing. "There is zero interest in our strategy right now," said John Hathaway, a senior portfolio manager at Sprott Asset Management, a precious metals investing group. He added, "The Bitcoin crowd sees the same things I see in terms of money printing risks of inflation." Guys, be sure to let me know down in the comments below what you think about the trading of AMC going on in the dark pool and the current sentiment shown by Google Trends. And as always, be sure to sign up with Moomoo to get those free stocks, because at the end of the day, everybody loves free money. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.